Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, last week, by and large, CME product volatility was virtually unchanged. But let's dissect it piece by piece just to see what happened during the week. Last week, equity vol, the VIX, virtually unchanged. We did see some breakdown in correlation, so the VIX compared to the VXN or VXD did have some moves, but virtually unchanged on the week. Moving on to foreign currency, especially G7 vol. 1 month vol on the week down about 0.25%, down to 6.1% for 1 month vol. A lot of that is due to the fact that we had a late sell-off towards the end of the week in Japanese yen implied volatility. It is important to note that Euro sovereign credit spreads did widen pretty well during most of the week last week. Most of that, if not all of that, was due to the news that finally came out over the weekend in Italy. Now, moving on to commodity vols, the vol was definitely mixed. Starting off with oil. Oil 1 month volatility on the week last week up 1.3 points to 27.3. On the other hand, we had gold volatility on the week, 1 month vol down 0.25 point to 11.4%. Now, what were the drivers of volatility last week? What kept vol in check? Most of the research that I look at just points to both the fiscal cliff and emerging markets, especially with China. Now that a lot of the news came out over the weekend in China, maybe vols will loosen up just a little bit. But what stands out right now? A couple things that stand out. First, the vol in equities fell again a second week in a row, now trading in the 16th percentile as judged over the last year. Term structure also flattened out. We saw a little bit of rally in implied vol in the front part of the curve, but on the week, term structure did flatten. Right now, term structure trading in the 36th percentile. On to skew. Skew also flattened, but a lot of the reason it flattened was that there's more of a bid for upside calls as opposed to downside protection. Right now, 1 month skew trading in the 2nd percentile as judged over the last year. On to correlation. Other than what drove volatility, what asset classes at the CME helped to keep a floor on volatility and helped keep a ceiling on volatility? On the one hand, we had oil and G7 vol. Both those vols contributed quite a bit to what happened with the rest of the asset classes, as all eyes were pointing on what happened with oil vol last week. And on the other end, we had gold and credit vol, both pretty benign for the week and keeping basically a ceiling on the rest of the asset classes in volatility. Should be an interesting week. We have the ECB, we have FOMC meeting coming up this week, along with the flash PMIs coming out on Thursday. Should be a very interesting week with volatility, but right now we are on hold as we can see what happened last week. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.